Hey there, and welcome to Real Estate Unpacked. So here's a question. When someone asks you what's happening in the real estate market right now, do you have an answer? Like a real one? Not the vague, it's a great time to buy, or inventory is tight stuff. I mean the kind of answer that makes people lean in and go, wait, how do you know all this? That's what this podcast is about. Every week, we are going to unpack what's actually moving the real estate market. The trends, the data, the economic shifts that matter. It's the stuff worth knowing. Whether you're a real estate agent who wants to be the go-to advisor in your market, or you're just trying to figure out if now's the time to make a move, this show is your weekly briefing on what matters right now in real estate and why. So let's unpack it. Okay, so let's talk about December, because the reports are all in, and on paper, December was kind of brutal. Pending home sales were down sharply. Cancellations were up. If you stopped the story there, you'd conclude that buyers slammed the brakes and everyone went home for the holidays discouraged. But then something happened. Mortgage applications jumped. No closings, no contracts, applications. And that distinction matters. Mortgage applications are not a finish line, they're a tell. They're the moment someone stops saying, I'll think about it, and starts saying, let me run the numbers again. Here's what likely happened during the brief dip in rates we saw earlier in the month. When mortgage rates touched 5.99%, even temporarily, people reopened spreadsheets. They reran payment scenarios. They revisited plans they had quietly shelved when rates felt just a little too uncomfortable. And yes, rates have already ticked back up a little bit, so that really low rate window didn't stay open long, but it didn't have to. That short dip was enough to trigger a reaction. So here's what happened. Let's start with the headline numbers from the National Association of Realtors. Pending home sales dropped 9.3% in December compared to November, and they were down 3% year over year. Every single region saw declines month over month. The Northeast down 11%, the Midwest down nearly 15%, the South down 4%, and the West down 13.3%. Now, NAR's chief economist Lawrence Yun called this a dampening of the short-term outlook after several months of encouraging signs. He noted that December can be tricky to read because of holidays and weather, but he also said something critical. Inventory in December was only 1.18 million homes, matching the lowest level of 2025. His exact words, quote, consumers prefer seeing abundant inventory before making the major decision of purchasing a home, end quote. But here's where it gets interesting. At the same time pending sales are falling, Redfin reports that over 40,000 home purchase agreements were canceled in December. That's 16.3% of homes that went under contract, the highest December cancellation rate on record going back to 2017. Atlanta led the nation with a 22.5% cancellation rate, followed by Jacksonville and San Antonio at 20.6%. Meanwhile, Nassau County, San Francisco, and San Jose had the lowest cancellation rates. Redfin's head of economics research explained it this way, quote, high housing costs and rising inventory have made home buyers more selective. Home sellers outnumber buyers by a record margin, meaning the buyers who are in the market have options and may walk away if they believe they can find a better or more affordable home. End quote. So we have fewer people signing contracts and more people backing out of the contracts they do sign. That's a buyer's market signal if I've ever seen one. Now here's the counterbalance. Mortgage applications jumped 14.1% for the week ending January 16th, according to the Mortgage Bankers Association. Refinance applications increased 20% and were 83% higher than the same week a year ago. Purchase applications were up 5% for the week and 18% higher year over year. The reason? Mortgage rates dropped to 6.16% for a 30-year fixed-rate loan, the lowest since September 2024. The Mortgage Bankers Association deputy chief economist said refinances now account for more than 60% of applications, and the average loan size moved higher. So here's the economic concepts to think about this week as we have clients reading the news and they're not sure what to do with it. There are leading indicators, and then there's lagging data, and small signals matter. Most of the housing data we obsess over, sales, closing, prices, well, that's lagging data. It tells us what already happened. Mortgage applications, on the other hand, are a leading indicator. They measure attention before action. And in real estate, attention is the first domino. Markets that are tightly constrained become hypersensitive to small signals. When affordability is stretched, inventory is limited, and confidence is fragile, you don't need a big policy change to move behavior. you need a nudge. Think of it like a massive ship at sea. The rudder is tiny compared to the ship, but turn it just a few degrees and the entire trajectory changes over time. That brief rate dip was the rudder. Not because it suddenly made homes cheap again. It really didn't all that much, but because it made the math feel workable enough for people to re-engage. Now let's be clear about what this does not mean. It does not mean a buyer frenzy is back. It does not mean sellers are rushing to list tomorrow and can jump that price. It does not mean 2021 is returning from the dead. What it does mean is that confidence is starting to thaw. People are no longer watching rates passively. They're watching actively. And that is a meaningful shift because markets don't turn when the data looks good. They turn when people start preparing again. So here's the part that matters most as we look towards spring. The spring market does not start when the calendar flips to March. It starts when people begin preparing, when buyers start talking to lenders, update their budgets, and start touring homes just to see what might be out there. And it starts when sellers start checking comps, watch days on market, and start asking, if we did sell, what would that look like? And the data suggests that preparation is already happening, and earlier than it did last year. And it's not loud, it's not dramatic, but it's quiet and intentional. Because right now the conditions feel just workable enough to engage again. So here's a real takeaway. Mortgage application data doesn't predict the future perfectly, but it does reveal behavior. And right now, behavior is saying this: the market isn't surging, but it is waking up. And in real estate, waking up always comes before moving. So when you zoom out and put all this together, the story isn't chaos, it's calibration. December gave us hesitation, and January is giving us attention. And attention is how markets begin to move before the headlines catch up. Which means this week when someone asks you, so what actually happened in the market? You've got a real answer. And that's exactly what we're doing here every Monday on Real Estate Unpacked, giving you the intel you need to be the real estate economist of choice in your market. If you found this useful, hit subscribe. That way every week you've got this week's market briefing ready to go before the conversations start. I'm Jennifer Templeton, fellow realtor and broker associate with the Crest Edge Group at Keller Williams Rockwell. And if this episode was helpful, whether you're buying or selling in the DFW area, or you're an out-of-market agent looking for a trusted local partner, our group would love to be your real estate resource of choice. You can find next steps at www.thecrestedgegroup.com/unpacked. Thanks for listening, and I'll see you next week.